this quite a bit. But the other is railways. And Nimish, you've looked at this in some detail.
Prashant,
What have you found?
Last 1 month, all the railway stocks have been buzzing. Even if you look at the valuation, they look very punchy. But the bigger thing is, if you look at the last 2 years of growth, that is what will surprise the market in a negative way. I'll just go to the wall and explain why I'm saying this. So let me put the data on the wall. If you look at the railway stocks in the last 1 month itself and the kind of rally the railway stocks have done, the chart will come up for you. In the last 1 month, all the stocks have been buzzing in the last 1 month or so. IRFC, Ircon, Railtel, RITES, RVNL. Look at the kind of move in the last 1 month, all in double digits, between 25% to 45-50% as well in terms of the 1 month move. But having said that, they're still down from the peak between 30 to 40%. So they've not hit the peak yet, what we saw earlier this year. But the rally has been pretty sharp in the last 1 month. But the question is the valuation. Now, if you look at the valuation chart for all these names, look at the valuation of all these companies. Ircon is sitting at 28 times 1 year forward versus the 5-year average of 15 times. Railtel is at 47 times now on 1 year forward. RITES is at 34 times versus the 5-year average of 21 times. And RVNL, which is the new entrant in the FNO, that is now trading at 60 times on 1 year versus that 5-year average of just 12 times PE. So that's the valuation picture. Next, the table which is going to come, that's going to surprise and shock a lot of investors. Look at the kind of growth these companies are reporting. On a sales, this is a 2-year sales, profit and EBITDA CAGR. Ircon, just 2% sales growth, negative profit, as well as just 9% or 10% EBITDA growth. Same is the case with IRFC as well. Look at the numbers, 3% sales growth to almost 3% profit CAGR and nothing for EBITDA. RVNL, the stock has been a big mover in the last few months. It's been a negative growth over the last 2 years, and the stock is quoting at 60 times. So that's what I wanted to explain, that earnings have not been supportive in many of these companies. The only stock or only company which has done relatively well is Railtel. That has consistently outperformed in the last 2 years in terms of sales CAGR of 33%, profit CAGR of almost 30-odd%, and EBITDA CAGR of 17%. Even RITES, for that matter, in the last 2 years, it's been a negative. In fact, there has been a degrowth, and the stocks have been buzzing. So, just to put into context, while we've seen a big rally, the valuations are quite punchy, the earnings are not very supportive, and that is what investors should watch out for. There is a bit of exuberance in the PSU basket, even in the rail basket, but when you look at the numbers, it shows you that it's not all good as far as the numbers are concerned. The last 2 year CAGR for someone like RVNL has been negative. Stock is at 60 times and quoting at almost 90,000 crores of market cap. So again, it's for viewers to just take a bit of an